Hello, good evening, everyone. Please confirm if you can hear me with your emoji, please. Okay. So sorry about what happened yesterday. I never planned for it, so that is why I just want to make up for the class now. And I just wish for. I hope we can just finish as soon as possible because another person is going to use this platform by 7 o'clock. So we need to be as fast as possible. Okay, so if you are seeing this video, you are just joining for the first time. Welcome to Advanced Audit and Assurance class. So, like we used to say, this is one of the most important and also kind of technically difficult courses to pass in professional. Can say times 2 or 3 of PM when we're in skills, and even times 3 of SFM. So, please let us be calm and also be attentive so that we'll be able to grab everything I want to say. So if you are just joining this class for the first time, you have not missed too much. So after this class, I am going to post all the videos from chapter 1 to chapter 5 now. Chapter 5, yes. I'm going to post all the YouTube video. Then again, I'm going to also explain directly from chapter 1 to 5. Because if you have been following this class, I said, majorly everything we'll be talking about in this advanced audit and assurance class has direct link, direct relationship with each other. I mean, all the chapters from chapter 1 to the last chapter, they have direct relationship with each other, direct link. So, if you are following from chapter 1 to 5, you see that everything we'll be explaining so far have direct relationship with each other. So, for you to have better understanding, I mean, for those of us that are just joining for the first time, for you to have better understanding, you need to understand the topic or the course as a whole from the beginning of the chapter, from chapter 1 to the current chapter we are about to explain to ourselves. So, let us proceed. Before I start, I'm going to do as I used to do, try and relate the chapters from chapter 1 to the chapter that we're about to discuss today. So, the chapter 1 has to do with the overall view, the general meaning of the word advance, or the general meaning of the word audit and assurance engagement from the beginning. What does it stand for? Type of assurance engagement, the assurance engagement and non-assurance engagement, as the case may be. So chapter 1 talks about the overview of the audit and assurance engagement as a whole. Then chapter 2 talks about the regulatory environment that guide the conduct of every practitioner, as the case may be, on any engagement. The chapter 2 talks about the regulatory environment. What are the rules and regulations we need to follow, the ethical regulation and the legal regulation we need to follow as a practitioner while discharging our responsibility to our client. Then chapter 3 now talks about the aspect of ethical requirement that was mentioned in chapter 2. And chapter 3 now expand more on it. That chapter 3 now talks about the rules that guide the professional conduct. The rules that guide the professional conduct as a practitioner, be an accountant or an auditor, the rules that guides our profession, the rules that guides the activities, the responsibility of each practitioner, what we are expected to do and how we are expected to behave in every engagement. The chapter 3 talks about it. Now, moving on to chapter 4. The chapter 4 of the Advanced Audit and Assurance now talks about the professional responsibility and liability. This chapter explains the responsibility put in place or put in the hand of a practitioner in the aspect of what the public expects, that it is the responsibility of the practitioner and what actually the responsibility of the practitioner in accordance with the regulatory environment that guides the practitioner. Then the responsibility of the responsible party, I mean the responsibility of the auditor and the management of the company you want to audit. So the chapter 4 talks about all the responsibility of the responsible parties and also the liability that an auditor are likely to face if the auditor fail to do what he or she is expected to do on every engagement. So chapter 4 expand and talks about the professional responsibility and liability of a practitioner. Now, chapter 5 now talks about the proper quality control, the practice management, this control, the quality of audit engagement that we can put together as a firm or as an individual to reduce the risk of expressing correct opinion. So, however, if you put a necessary thing together, everything possible to make your audit work uh, good, to deliver a very simple and absolute work for your clients, then you need to put in place a proper quality control. By putting in place proper quality control, it's going to help you to reduce the risk of expressing correct opinion and also to reduce the liability you are going to face as an auditor. So chapter 5 talks about those elements that we can put together to ensure good quality control in order to help the audit firm or an auditor to reduce the risk of expressing correct opinion and also to eliminate or reduce auditors' liability, as we talk about in chapter 4. Chapter 4 talks about list all the liability that auditors might likely to face if they fail to perform their responsibility. Then chapter 5 now talks about the things we need to put together as an audit firm, as an auditor individual acting alone to reduce the risk of expressing correct opinion and also to reduce any element of professional liability. So that is the direct and overview of from chapter 1 to chapter 2. And as I explained, you also know, all of us will notice that all these things, as I said, even though this is the first time you're attending this class, as I'm trying to link it together, you know that these things actually have direct relationship with each other. So, chapter 6, the audit strategies. We have tried to establish part of this thing yesterday, but due to network issue, we were unable to proceed. So, how does this chapter link to chapter 5 and how does it link to all other chapters? You see, these strategies, the approach that you can use as an auditor, the approach that you can use as an auditor before you commence any auditing of financial statement or any engagement as the case may be, you need to understand the approaches you need to adopt, the strategies. What are the strategies? Is by understanding the environment and the risk that associate with that particular organization or business before you can now adopt or before you can now choose any audit strategies to use or any audit approach to use for that particular engagement. So ISA 315 of International Standard of Auditing states that ISA 315 emphasizes on risk assessment of every business organization, and by understanding the environment of that particular organization. So before you can choose any audit strategies or any strategies to use as the case may be, as an auditor, you need to first of all understand the environment, the business environment, the regulatory environment that business organization is operating from, and the risk that business organization is probably likely to expose to before you can now choose any strategies or audit approach for the auditing of their financial statement. So these are the things we are going to be talking about under this chapter, and we are going to do just that and proceed with our class. My name is Olatunji Idris, so I'm your regular uh, tutor for this advanced audit and assurance. In case you are just joining for the first time. So let us proceed. Please, I hope you understand. I hope you are hearing me. I hope everything is going well. Do we have any question? No. Are we okay? Yes. Can I proceed? Yes. Thank you. Okay, as I explained yesterday night, I said all the strategies. What is the meaning of that strategy? It's two words that can stand alone by. Audit. What is audit on its own? What is strategies? Audits that, as we normally said, is the independent examination of financial information of an organization by an independent auditor in order to form an opinion on the financial statement, whether it is of true and fair view, fairly presented, prepare with free from material misstatement, and also prepare in accordance with international or in accordance with regulatory standard. So strategy is that element, that adoption, that that strategies has to do with different options we explore as an individual or as an auditor in order to achieve a given task. So what is now audit strategies? So audit strategies can be defined as that method, that element, that planning, that approach that auditor adopted in order to carry out its responsibility on the examination of financial information of a particular organization. That strategies, that strategy, the different strategies that you adopted as an auditors in order to carry out your responsibility and to audit the financial statement of an organization is what we call audit strategies. Please, I hope you are following as I am taking it one by one. Please, at every point, if you did not hear me, please let me know. Okay. So, after we have explained to ourselves many about the strategies and everything, let us now observe the four types of audit strategies and approach. What are these approaches? So, I'm going to explain uh, these four approaches in one single word. Then I am now going to now explain to our, we'll now see what we have in our material and we'll now proceed by each of the strategies. But before then, I'm going to ask, my dear professional colleague, I will just give us just 5 minutes. I'm going to open the class. I'm going to ask us this question. What, before we choose any of these strategies, what are the things auditor need to put in place or auditor need to know before you cannot choose any of these strategies to be adopted by you when you want to examine any financial statement? So, Damilola, good evening. Let us hear you. You have the floor, please.
Good evening, sir.
Good
Um,
evening.
Good evening, sir. Firstly, we need to know the kind of industry that this company is operating in.
I think I've given you that clue, but industry as well is not comprehensive enough. Can you reshape it and put it
Okay,
together very
we
well?
need to know the kind of business environment that this company is working in. So, like, we need to know if the company is working in if it's an oil and gas company, if it's an agro business company, if it's a logistic company. Each company or each industry have their own processes, have the way they process, how they do their processes, their procedures, and the rest. So we
Yes,
need to understand the kind of company that this particular
yes,
company is kind
definitely.
of industry.
You are right, Damilola, but that is just not the number one thing. That is also part of it, actually, but not the number one thing. So, one of the things, please, you have to raise up your hand before you can talk, please. So, yes, Damilola, you are very, very correct, but it is not actually the number one thing you need to know, but it's part of it, Sha. Thank you, Dami, for your contribution. So who else is Mr. Isaac? Please, you have the floor.
Okay.
Isaac,
Hello,
you have the floor, please.
good afternoon, sir.
Good afternoon.
Good afternoon, sir. I think the first thing we need to consider the environment and consider the people environment before you adopt any business.
We can't hear you.
I thought that you need to consider the environment.
You have to probably put it in the chat box because I believe you are on transit and the network is not friendly at all. So you can put it in the chat box. Thank you, Mr. Isaac. So Mohammed Yakub, you have the floor. So after that, I'm going to call other two people person, then we are going to go. Mohammed Yakub, you have the floor, please. Mohammed Yakub, you have the floor. Okay, Habib, please go on.
Good evening, sir.
Good evening, Mr. Habib.
Okay, so I'm thinking before we can check, we need to first check the size of the business. That is it a small scale business? Is it a large scale business or medium scale, so that we can know how to what to adopt in terms of this thing, and also probably the industry, just like this man mentioned. What kind of industry is it? A financial industry, so we can know the kind of employees, auditors to assign um, to the organization. I think that
Yeah,
is it.
thank you. Thank you. Yes. That's not still among he's still among, but that's not what I'm actually I think you guys are supposed to back it up with something. Okay, yes, thank you, Habib, for your contribution. So blessing, you have the floor, then we'll
Okay.
call
Good evening, everybody.
good evening.
I think first of all, you have to know the business process, then the internal strengths and weakness of that particular business. I think those two internal and external strengths of that business.
Yes, thank you. Yes, still among it, but not this thing. So Sulaiman Miriam,
Hello.
Good afternoon, sir.
good afternoon.
The auditor, before you embark on any strategy, you have to know first and foremost, every business fakes the risk of business risk, which is financial risk. So you have to know if there is going to be something like maybe foreign exchange risk, and how to and you have to know the operation of that industry that the company falls
Okay.
under. So maybe, for example, now, if it is like telecommunication, so you have to know what are the risk facing telecommunication in time of their weaknesses and strengths, and also in time of their services. So you just have to know the business environment very well, so you
Okay,
can
you started very well by mentioning that risk, but all those financial risk that you now added to it was wrong. Then the ending is actually okay. So, in order not to waste our time, please let us put our hands down. So the other people I will also call when we have another question. So, specifically, in order to choose any audit approach or strategies, specifically ISA 315 states, and the ISA 315 is identification and assessing the risk of material misstatement in the financial statement by understanding the regulatory environment of that particular organization. The industrial and regulatory environment, that's number one. Then under that, you can now think of the risk, because if you understand the regulatory environment, then you understand the risk that the business will probably face. So before you now think of the size of the size of the organization, yes, it's also part of it. That's three. Then the internal control of that particular organization, yes, that's four. among others. But the number one thing is to understand the regulatory environment and the risk associated with that particular business. Then the size of the organization is also part of it. The internal control of the organization is also part of it. Okay, so among others. So however, Mr. Habib, you can put down your hand, please. So however, among others, these are the things we need to put in place before we can choose any audit, any of these four approaches or strategies for the auditing of financial statement of a particular organization. So I'm going to explain all these things one after the other before we now see what we have in our notes. So number one, business risk or risk-based approach. This is one of the widely used audit strategies and approaches, because under this, it works with a very large organization. It is suitable for a large organization, where like a company like Dangote PLC, NMPC, and some big organizations. So this business risk or risk-based approach is best used in that particular organization, talking about the sizes of the organization, the risk they are exposed to, and the internal control, because they are big. So business risk or risk-based approach is best used. So what is now business risk or risk-based approach? Under this approach, this is a type of strategy used by an auditor in which the auditor critically examine and evaluate the risk that the organization is exposed to, then evaluate the risk and the impact of that risk on the financial statement, and also provide a way out or solution on how that risk can be mitigated in order not to have effects of material misstatement on the financial statement of that particular organization. I'll say it again. Business risk approach or risk-based approach, it is best used for a very big organization, and where the internal control of that organization, or it is widely used for a very big organization. However, business risk or risk-based approach, it is a type of approach adopted by an auditor in order to critically examine the risk associated with that particular organization. That's number one. Then evaluate the risk. That's number two. Then also evaluate the impact of that risk on the financial statement. Then also to look for a way or plan to mitigate the risk in order not to have material misstatement on the financial statement of that particular organization. Then after that, you are talking about business risk approach. Please, am I communicating? Please, do we understand the way I just place it like this? I'll say it again. Business risk approach, it is best used for a very large organization. Then, however, business risk approach can be defined as that approach whereby the auditor continually or whereby the auditor strategically examine the risk associated with a particular business organization, evaluate the risk, then also evaluate the impact of that risk on the financial statement, and also plan a way around to mitigate the risk in order to reduce the impact of material misstatement on the financial statement. That is business risk or risk-based approach. Please, am I communicating? Do we understand? Hello, everybody, am I communicating?
Yes,
Okay,
sir.
so
Yes, you are.
okay, that is business risk approach. It is
Yes,
best
sir.
used for a big organization. Then system-based approach. System-based approach, you might want to say that it is the same thing. However, this type of approach is also suitable for a big organization. But this is a type of approach used by an auditor in where there is weak internal control system in a particular organization. After your preliminary investigation, and you find out that this organization lack internal control structure, their internal control is very, very weak, then the best approach to use is system-based approach. This is the type of approach or strategies adopted by an auditor in auditing financial statement of an organization where there is weak internal control, or to check and correct the internal control environment of that particular organization. Then system-based risk is used for for an organization that have weak, or in order to put in place good internal control for that particular organization. Then the auditor can use system-based system-based risk approach. Please, are we following? Although we are still going to go into the detail, but I just want to explain it to us so that we understand at least the overview of each of the approaches that we are using. Now, substantive test approach. Substantive test approach, it is approach that is widely used when that system-based risk approach now is very, very weak. That is, where the internal control of that particular organization is very, very weak. Then, as an auditor, the best approach to use for the auditing of that particular financial statement is substantive test approach. This is a thorough investigation of financial statement, the checking of the evidences, using financial statement as action in order to arrive at suitable evidence, and in order to gather suitable evidence on which an auditor is going to form an opinion whether the financial statement is of true and fair view or not. So substantive testing approach, it is type of approach where the internal control of a particular business organization is very, very weak. By this, we subject to use substantive testing approach. And this approach, it is the thorough examination of financial information in order to gather the substantial evidences of which opinion is going to form whether the financial statement is of true and fair view. So one of the tools to use under this substantive testing approach is financial statement assertion. And this financial statement assertion, there are 4 or 5 in some cases. We have KIF. We used to call it KIF. CEAV, as the case may be. The C start for completeness or cutoff. Does the transaction start and finish in the same financial year? That is C. That is completeness. Cutoff, does that transaction actually happen in that particular financial year? The E means existence. Does the transaction happens at all? These are the assertions you are going to use when you are using substantive testing approach. I'm still going to explain further when we dive into the explanation as a whole. So I've mentioned C, which is completeness or cutoff. The E, which is existence. Does the transaction actually exist? So you need to check whether if you ask for a receipt or an invoices, you need to check this transaction. Does this how many years is it going to last? Maybe some goods there, maybe one is to be supplied 2024 and the remaining part is to be supplied 2025. And the portion of that, you need to calculate the portion of that goods supply in that 2024 in order to know the actual figure posted in the financial statement. So existence is also important as one of the financial statement transaction when you are using substantive testing approach. Then the other one is accuracy, which is A. Accuracy is A there. That A means that the figures therein they posted in the financial statement and the figures on the receipt or invoices they presented to you, are they the same thing? If you add everything together, maybe about 10 items in the invoices, if they added it together, is it the same amount you posted into your general ledger of the particular organization? So you need to check all these things. That is accuracy. Then valuation, that particular amount, was it posted? Did they post half of their month in the GL, or they posted everything? So by using that key, which is CEAV, that is financial statement assertion. It is the assertion used when you are using substantive testing approach in order to check thoroughly the financial statement, whether it's of true and fair view and it is free from material misstatement. Don't forget, this substantive testing approach, it is best used where there is very weak internal control system in a particular organization. Then finally, financial statement approach, it is the most cheap and simplest approach to use. This approach, it is type of approach whereby the auditor just need to examine the closing balance of particular transaction. The closing balance of last year transaction must definitely be the opening balance of this year transaction. Then, however, by ensuring that it's just to understand that the closing balance of previous year must be the opening balance of this year in order to check whether the financial statement is of true and fair view. So if the closing balance is correct and it is correctly brought forward as opening balance this year, then the only thing to check as an auditor is the transaction for the year. So under this financial statement approach, this approach is used whereby auditor just need to check the closing balance of previous year and marry it with opening balance of this particular year, and also examine the transaction for the year in order to form an opinion whether the financial statement is of true and fair view. So these are the explanation of each of this approach and how they can be adopted as in any case or in any audit of financial statement of any particular organization. Please, I hope we get it from this little explanation I just before we move into the meaning of each of these approaches very well. The reason why I explain first is for us to have this wide understanding about it. So as by the time we are now reading through what we have in our material, then you begin to understand very well, because everything that I've explained, we will definitely meet it in this explanation of each of these approaches one by one. So please, can I proceed? Are we following in place? I
Yes,
want to
sir.
assure you, this
Yes,
class is
sir.
not going to be, we are not going to waste our time. We are going to finish everything once, and we proceed uh, as promised. So let us go. Now, let's see. The now said the auditor, in line with the organization pattern, may adopt any approach. It should be noted that these strategies are not mutually exclusive and may be used in combination. So what they are saying here is that it does not mean that you have to choose any of these things and use it in any engagement. You can use any of these approaches together. You can combine any of these approaches together. So far, you just want to make sure that your opinion that you want to state as an auditor can be how do I put it? Can be placed reliance on. So let's go. Business risk approach. Business risk is the probability of the occurrence of an event or development that may adversely affect the ability of the entity to achieve its objective. However, business risks are risks faced by management of the client entity, which could have an impact on the company business, financial statement, or even going concern of the business. The business risk approach involves the auditor looking at the business as a whole and carry out an evaluation of the risk to which it may be exposed to. Then the auditor under this approach will identify the business risks that may have impact on the financial statement of its client. The practitioner also identify the key business risks, evaluate the possible impact on the financial statement, and then plan the approach to the audit around the key business risks that I've identified. The business risk approach cannot work effectively unless the auditor has a good understanding of the client business and its environment in which it operates. That is why I asked that question in the first place, that before you choose any strategies, what are the things you need to know? So this is what we just explained now. So, however, ISA 315 talk about identifying and assessing the risk of material misstatement through understanding the entity and its environment. So that is business risk approach. Please, do we understand? Let me see your emoji so that we can proceed. Do we understand very well? Okay. So under this business risk approach, we have two type of business risk: the internal risk and the external risk. Let me explain. The internal risk, these are the inherent risk that is associated with that particular business or the organization is doing. The internal risk, they are inherent risk, they are inborn risk. That is, as the business starts like this, the risk is associated with it. Let me give us an example. Now, POS business. What is the risk associated with POS business? One of the internal risks is there's possibility that one day you are going to take fake alert, or you are going to give customer for money for a transaction that that was not successful. Am I right? Please let me see your emoji if you are following, so that I know that you are flowing with me. So that particular example I just stated, they are internal risk. They are inherent risk. That is, as the business exists, that risk is born with the what? With the business. So another example of that this thing is maybe one day maybe there may be any fraud trace to your terminal, because maybe as a sort of attending to a customer, or so maybe there is stolen card and they use it on your machine. So that is another type of risk. So in a nutshell, so this example now will now open our mind for our mind that, oh, as this risk as this risk is associated with this business, so the auditor will now want to now plan around those risks that the auditor knows that it is associated with that business. Then also plan how this risk is not going to have effect on that financial statement. Then also how this risk can be mitigated so that it will not have material misstatement on the financial statement. So that is this type of risk. So however, we say we have internal risk and external risk. The external risk are just risk that is not internal risk, but however uh, they have significant impact on the financial statement if it is not taken care of. So let's examine the type of each type of the business risk. Then we have internal business risk and external business risk. So let us talk about the internal business risk. These are risks that can be found or exist within the business environment. They are risks inherent in the internal organization. Some example of internal risk will include, among others, risk of weak management. That's example of internal risk. Risk of weak management. Then others, risk arising from ineffective employees. Risk arising from ineffective what? Employees. The other one is risk of lack of customer care. That is, if that organization lack a good customer care policy, then it is internal business risk. Then the other one is risk of poor financial management. When you don't have good people to manage your organization, the financial aspect, it is internal business risk. Which other one? The risk of poor or weak internal control is another type of internal business risk. The risk of misappropriation of assets is another internal business risk. The risk of fraud, just like the type of example I cited for this POS business. Risk of fraud is also type of internal business risk. Then risk of incompetent or unproductive employee That's another example of internal business risk. Then also the risk of persistent or over reliance on few individual. When you are having this concept, oh, this is the person that can do this work in that particular organization, then is another example of internal business risk. Then lastly, we have risk of not meeting customer need. You see, it is one of the disadvantages when whereby the organization is not meeting the demand. Then is all these things, they are the example of internal business risk. Hello. Okay, please. Can you hear me? Since the network is misbehaving again, but I think I'm back now. I hope you can hear me. Okay, so okay, thank you. So these are the example of internal business risk among others. So these are the example of internal business risk. Then let's go to the external business risk. External business risk. Because we need to finish this topic this night, and we just have 1 hour to go. So the example of external business risk, we have possible loss of major contracts, impact of new competitors in the market. When there's new competitors in the market, then it's another external business risk. Then impact of non-compliance with new technology. When there is a new advanced technology in town that will make your business to flourish, and your organization has not adopt that or use that software, it's another external business risk. Then which other one? We have threat from competitors, then impact of natural hazards, just like thunderstorm, erosion, the case may be. Long-term decline in demand for company products, whereby the company products, the customer are not demanding for it as they used to be before. Then impact of changes in laws and regulation, unfavorable government policy, decline economical performance, and rising inflation, among others. These are external business risk. So how do we evaluate this business risk approach? So this risk evaluation comes in two ways. The likelihood of the risk to happen and the impact. So that is the two way we can assess we can evaluate the risk on every business organization while we are using business risk approach. Please, are we following? Boniface, please, you can put down your hand, please. When it's time for us to ask question, I'm going to open the door. So, risk evaluation. Why under the business risk approach, we can evaluate risk in two ways. We need to understand the likelihood of that risk, the occurrence of that risk, and the impact. So that's why I use this table to explain. We have the likelihood, and the impact. Then we can now use it to categorize this risk in 4 ways. We have category risk 1, category 2 risk, category 3 risk, category 4 risk under the likelihood and impact. Then we also have high likelihood and low likelihood, then high impact and low impact. So for category 1 risk, it means the probability that risk is going to happen is very, very high. That is category risk 1 under the likelihood. The likelihood that the risk is going to happen, whether it is fraud or uh, uh, loss of major clients, as the case may be, those are the risks that we have explained before. The category that the likelihood that there is going to be, let me use fraud as an example. When we are evaluating risk under business risk approach, let me use fraud as an example. So under likelihood and high impact, that is the likelihood ahead. So let me now use that POS business under fraud. So now for high impact and for impact and likelihood, the probability that fraud is going to happen under POS business, the likelihood that fraud is going to happen is high. Then if the fraud happen, the impact of that fraud will also high. Those are the risks that is under category risk 1. It means that the probability that fraud is going to happen on that business POS business is high. And if that fraud happen, then it's going to have high impact. That is, it's going to affect that business greatly. Then those are the risks that comes under category risk 1. Please, are we following? Are we following? Please, let me see your emoji. Yes, thank you. So now, for category risk 2, for that same fraud, this thing is telling us that the likelihood that fraud is going to happen on that POS business, the likelihood is very, very small. It's low. But if that risk happen, if that fraud happen, it's going to have high impact on the business. So those are the things that fall under category risk 2. It means that the likelihood that that fraud is going to happen is low. But if that fraud happen, it's going to have high impact on the business. Those are the risks that comes under category risk 2. Now, for category risk 3, these are the type of risk that the likelihood that that risk or that fraud is going to happen on that POS business is very, very high. But if that fraud happen, it's going to have low impact on the business. That is not going to affect the business like that. So those are type of risks that fall under category risk 3. Now, the last one, category risk 4. These are the risks that likelihood that fraud is going to happen on that business is very, very low. And eventually, if that fraud happen, it's going to have low impact on the business. These are the things that now fall under category risk 4. So you can evaluate your risk as an auditor using the impact and the likelihood. So you are now going to establish them under each of the category and see how they are going to affect the business before you now continue your work as an auditor or your responsibility. So after that, let us quickly move to the advantages and disadvantages of this approach, this business risk approach. What are the advantages? What are the disadvantages? Please, I hope you are following. I hope you are following, everybody. Okay, thank you. Now let's go. The advantages of business risk approach. Number 1, it makes the auditor more knowledgeable. As the auditor, we need in-depth knowledge of the client business. That is just like what we said, that before you can think of any strategies to use, you need to understand the business environment. So you need to understand the business environment. So one of the advantages is that it makes auditor more knowledgeable, as the auditor need in-depth knowledge of the client business. Then again, it save audit costs, and we also reduce audit time, and also fewer audit tests will save time and few staff. It means that it save cost. But how does this save cost? It means that the cost of testing or establishing which type of audit approach to use. So since the auditor now have more knowledge about the business, it's going to save cost, or it's going to save audit cost, and also save audit time. At least going to save the time that the auditor is going to use on the job, because since you already have the information about the company, so you already know what to do when you start the audit exercise. So you no need to waste time, and it will also save audit cost. Then number three, it helps to minimize audit problem, because more audit problem is business related than internal control. That is, it minimizes the audit problem, because the more you understand the business, the more you know how to tackle the business, rather than just focusing on the internal control of that particular organization. So these are among other advantages. Number four, it gives auditor the clear understanding of its operation and recommendation for effective and improved performance. So it helps the auditor, in which as the auditor understand the operation of that particular organization, then the auditor can plan for an effective way in which the organization can improve on their performances. So business risk approach helps the auditor to give accurate solution to the client by after understanding their operation and assessing the risk associated with that business. Then it helps an auditor to give an improved recommendation for effective and to improve the performance of that particular organization. The last one, it keep the auditor up to date with a changing environment. So by knowing your the business environment of your client, then it's keep an auditor updated about the new development in the regulatory environment of that particular business or the industry where the business operates. So these are the advantages of uh, business risk approach or system-based approach, as the case may be, as an auditor to adopt in the examination of financial statement of a particular organization. So let's go to these advantages quickly and see. One of it is that one, it may be efficient for large, it may be efficient for large companies. I meant to be inefficient. That is, I meant to be inefficient for large company. That is, for a very large company, it may be inefficient in the sense that for an organization that have a small, for a small business, small size audit firm, and you want to audit a very big company like NNPC or Dangote, you know that this approach you want to use, because it requires a very large number of staff and everything. So in a case whereby the organization have small size or small employee turnover, so this approach, it is inefficient to use. Number two, the broad knowledge and understanding may be limited to the auditor, because the organization is very so under this business risk approach, because they know that, oh, you have know their secrets, the risk associated with that particular business. So they might want to give you a clear understanding of what you need to know as an auditor to help you examine the financial statement thoroughly. So this is one of the disadvantages of business risk approach. Number three, it may affect the issue of independence as the practitioner gets involved in the business operation of its client. That is, the independence of an auditor, that is you expressing your opinion the way you're supposed to express it, is going to be a problem when you are using this approach, because the organization will tend to see you as if you already know more about their secrets. So we can tend to do anything we like. So under that, it will deter the auditor to express its opinion the way it's supposed to express it. So it lead to auditor lack of auditor independence. You not have that mind to experience or to give opinion on that particular financial statement, because they thought that you already know everything about the business operation of that particular organization. So this is one of the disadvantages of business risk approach as an auditor, that an auditor can use. The last one, the approach will require audit staff with required experience. That is, this approach, when using it, almost it is demanded an experienced staff. It demand more experience from the staff. That is, before you can use this approach, the auditor must be well experienced and equipped. It's not for all this new, or I just joined auditor, that I just joined the firm. So you need to be experienced, and you must have been practicing you must have been practicing the audit this thing for a very long time before you can use business risk approach, because that approach is kind of technical and critical to use for an inexperienced auditor. So these are the disadvantages of business risk approach, among others. So now, what I now ask that time, so these are the necessary factors for factors to consider before choosing the audit strategies as an auditor. Before you choose audit strategies, the following are the factors you need to consider. Number one, the nature and size of the client business. We've talked about it before. And number two, the control procedure and control environment. Who are the people in charge of the management of that particular organization? And the last thing, the audit method and techniques favored by the audit firm. So after that, you now determine the techniques that will favor the audit firm in order to arrive at your opinion. So these are the ways, or how audit business risk approach can be used as an auditor while you are auditing the financial statement of a particular organization. Please, I hope we are clear with this business risk approach. That's why I take my time to explain very well, so that when we are using it or when we are writing something about it, we understand very well. Please, I hope we understand. Let me quickly can we ask question? Okay, 2 minutes for question. Question, please. Do you have any question? Okay, so I assume there is no question, because I actually took my time to explain it very well. Although I've explained everything before, you can see that from what I've explained before, while we are reading through it, we now tend to understand better, because it is what I've explained before. That's what we are still meeting again. So let's go to system-based approach. The system-based approach focuses on the internal control system, just like what I said before, in an organization, and the functionality of that internal control in that particular organization. However, in line with ISA 315, the auditor is expected to have full understanding of its client business and operation, of which the internal control is inclusive. The management has the responsibility of putting in place a suitable system of internal control to address, identify financial statement, operational, and compliance risk. Just like internal control. Why do we set up internal control in an organization? Is to enable compliance, that is to enable the staff and every member of the organization to to uh, uh, to comply with the rules and regulations guiding the business or the policy of the organization. So that internal control is that special department that ensure that organization policies, program are what are being complied with by the staff of that particular organization. So it might be in the aspect of finance department to ensure that proper accounting system is put in place in order to make the accounting work more effective and accurate. So in the case of audit of financial statement of that particular organization, it will be easy to audit, because they have put in place proper accounting system that is just going to, so whenever I just need this general ledger on this particular thing, just query the financial statement, the accounting statement is going to just give you the report. So internal control system is just to ensure compliance, and it is the responsibility of the management to put in place proper internal control in order to help the auditor to perform their work effectively. So by doing that, so system-based approach is the approach that you can use as an auditor when there is good internal control in a particular organization. When there is good internal control, whereby you know that you are not going to stress yourself, all the information, the documents you need for the audit process has been supplied to you because of the strong internal control of that particular organization. Then you can now use a system-based approach. I hope you are following. So, however, there are, according to ISA 315, there are 5 components that must be present while we are using system-based approach. You know, we said that businesses based approach is that approach that auditor can use when there is what good internal control put in place by the management of the organization in order to make the audit work easy and suitable. So, however, in accordance with ISA 315, there are 5 components of that internal control system that must be put in place by the organization or by the management of that particular organization in order to help the auditor to have smooth and sweet audit period. Number one, we have the control environment, the firm risk assessment process, the information system, the control activities, reviewing and monitoring the control. I'm going to explain this in just 5 sentences. The control environment, that is one of the responsibility of the management of the organization to have a control put in place in order to check the activities of each staff and whether the policies and the organization standard put in place are properly followed, if they are if the staff are following it or not. So the control environment will be that attitude and action of the management of the organization to put in place in order to ensure that the organization to check the organization structure and the policies if they are being followed by the staff. So it is the responsibility of the directors or the people in charge or the senior managers in that particular organization to ensure that they put in place proper control environment in order to check the activities and to ensure that all members of the organization are comply with the organization policy and standard. That is control environment. Please, are we following? Please, are we following, please? Okay. Now, firm risk assessment process. This is also one of the components of internal control. It is that type of the component of internal control whereby the firm, the organization assess the risk associated with that particular operation, with their line of operation on a daily basis. So this component is that component of internal control in order to evaluate the risk that the business is facing on a daily basis and also know how best they can tackle the risk in order not to have effect on the financial statement of that particular, or in order not to have effect on the operations of that particular organization. So we have the control environment that it is the responsibility of the management to ensure that they control the organization in order to reduce any risk of operational misfunction. Then risk, firm risk assessment process. It is that compliance or control put together as one of the components to ensure that they evaluate every risk associated with every business or every operational activities of that particular organization, and also look for a way to mitigate the risk in order not to have significant effect on the operational activities of that particular organization. The information system has to do with the information system as type of internal control component, which has to do with putting in place proper information system that will help the organization to achieve their desired objective. just like a finance department, I said by using proper accounting application or software, maybe using Sage or Zero software or QuickBook as the case may be, to help them, the account department, to ease their work, and also help them to be on their toes during audit period. Not only account department, maybe you putting in place a proper information technology to help the operational activities of that particular organization as a whole. So this is another component of internal control. Now, control activities. After the management ensure that they are put in place control measures to ensure that all member of staff of that particular organization now comply with, then control activities. It is now their responsibility again, which is one of the component of internal control, to ensure that people are actually following the control activities put in place, or the rules and regulations set by the management of the organization. So control activities is one of the components of internal control, to ensure that the staff or the organization are doing what they supposed to do. Now, the last thing is reviewing and monitoring the control. After you put in place the control, you have to also put a place some people that they are going to be review the work. Okay, now, okay, this is the work of of uh, of of account department. So who are the people that are going to check the work of account department? That is why we have the internal audit department in the organization. So all the work that the account department do over in a week, so they are going to transfer the report to the internal audit department to check and review the activities of that particular organization. So in a nutshell, the review and monitoring control as one of the components of internal control is to ensure, to review and monitor that each of the department or the organization structure are well equipped, and all the policies and rules and regulations laid down by the organization are followed and adhered to by each or staff of the management of the organization. So if the organization put in place these 5 components together as stipulated by ISA 315, then it will help the auditor in doing their audit work fast. Thereby, the auditor can use system-based approach, because the internal control department or the internal control of that particular organization is working effectively. Please, do we understand at all? Everybody, please, do we understand? I hope we are following very well. Okay, because we just have small time, because some people will be using this platform later in the afternoon, so we need to be fast about it. Now, I've explained all this environment. Let's quickly read through it and see if so this is the attitude and action of director or management regarding the control within the organization. This control environment provides the structure and discipline for achieving the objective of the system, just like the way I explained before. Now, so in evaluating the control environment, the author should consider the following: management participation in control process, management commitment to control culture, and the likes. So firm risk assessment process. That is, for a strong system internal control, management should identify and assess and also manage the business risk on a continual basis, just like what I explained before. The information system, in line with ISTA 315, the auditor is expected to have full understanding of the firm operation, including the accounting system used by the management, to the extent that they may affect the financial reporting. The information may consist of the physical and hardware component, the software IT-based accounting system, people, procedure, and data, and also the IT risk management, as the case may be. Now, control environment. The control environment are the practice and procedure used to ensure that the entity objective are achieved. Under this, we have authorization control, that is the people that authorize payment in the organization. The physical control has to do with the safeguarding of the company asset. The arithmetic control has to do with checking the arithmetic accuracy of the data of the financial statement. The accounting control, just like what I said before, this control provides the accounting procedure to ensure that the accuracy and completeness of the accounting record. Then management control, the organization have to put in place supervisors. Then segregation of duty. This means that dividing work to be done between two or more individuals so that checks and balance will be effectively carried out. Then we have the review and monitoring control. So this is the summary of system-based approach. And why I explained that time, if you could remember, I explained that if organization have a very good internal control system, then they can use, and then it will help the auditor to know the approach to use, and that approach is system-based approach. But where there is low or weak internal control, the approach the auditor can use is what? Substantive testing approach. So I've explained that. So this summary will just open our mind and give us more insight on how we can now use both system-based approach and substantive test approach. Now, we have weak assessment internal control, we have strong internal control. So when we have weak assessment internal control, then the approaches to use, it will be extensive substantive tests. Can you see it? Can you see it? When there is weak internal control, weak or access internal control, then the approaches to use is what? Substantive testing approach. But when there is strong internal control, then there will be tests of control that will be put in place. Then for that, there will be good control, and then it will reduce the substantive testing. So by that, if there is strong internal control, then the approach to be used is a system-based approach. But when there is weak internal control, it's going to lead to poor control, then extensive substantive testing will be used. So what is now substantive test approach? That is what we want to describe now. Please, are we following everybody? I hope you understand the way I'm taking it one by one. Okay. So what is now substantive testing approach? I've explained before, so I will explain again, and I'm going to also do the explanation on the financial statement assertion again. Now, this audit procedure performed to detect material misstatement in the figure reported in the financial statement. This approach is appropriate where the system and control are weak or not operating. I've said that before. Substantive tests on transaction and balance are therefore necessary to reach an opinion about the financial statement of that particular organization. Of that particular organization. So let us proceed. It is therefore suitable for a smaller company where control are weak. The substantive tests are designed to obtain evidence about the financial statement as action. They include test of details on transaction, account balances, and disclosure and analytical procedure. What we are saying here is very, very simple. It's very, very simple. We said substantive test approach is that approach that auditor can use when there is weak internal control or where the internal control is not working at all. However, it is suitable for what? For a small business organization. Then the substantive testing are designed to obtain evidences about the financial statement assertion. And what are those financial statement assertion? They are that key that I mentioned that time. We have C for completeness or cutoff. We have E for existence. We have A for accuracy, and we have V for valuation. Then this thing also includes test of details on financial statement. It is under test of details on the financial statement you can use that key, and this analytical procedure is, are they following the standard that they supposed to follow while preparing the financial statement. So substantive testing, it is that approach that you can use for thorough examination of financial statements when there is when the internal control system of an organization is weak or not working at all. By this, the auditor can reach an opinion by testing the accuracy of the transaction, the accounting balances, and disclosure, and also the analytical procedure. So by that, the auditor can use substantive testing approach. Please, are we following everybody? Please, are we following? Hello? Do we have any question? Not yet. So after this final one, then I will now open room for question. Then we will now call it a day. Now, the financial statement approach I've explained before. Auditor can use this approach. This is the simplest approach to use. However, don't forget that I said that it does not mean that you have to use this one particular approach on every engagement. You can use the four approach together. It's not like you have to use one and ignore the other three. You can use the four together in every engagement. So what is now a statement of financial position approach? I've explained before that this statement of financial position approach is also known as approach to audit based on wholly on substantive testing. Under this approach, it is believed that if opening balance and closing balance of statement of financial position are correct, then the profit for the year must also be correct. However, this approach is opening net asset plus profit for the year will be equal to what? Closing net asset. This approach primarily concentrates on testing balances as opposed testing balances and transaction. This approach is often well suitable for small company. What we are saying here is that the financial position approach is this approach that auditor can use by confirming the closing balance of prior year financial statement. Let's examine that. Let's assume, for example, 2020, we want to audit 2024. So the closing balance of 2020 financial year is 20 million. So 20 million should be the opening balance of that particular audit that we want to audit. So by now examining that, we will also consider the profit for the year or the transaction for the year of that particular organization if they are correct. So if everything is correct, definitely the closing balance for that particular year will also be correct. By that, we are testing more detail on the balances of financial statements rather than testing the transaction as a whole. So financial statement approach or financial position approach is that approach to use by an auditor when you are auditing small or small business organization. It is the approach used whereby the auditor confirm and check the correctness of the closing balance of previous year and ensure that that closing balance is the same opening balance for the current year. Then also check the transaction for the year or profit for the year. So by checking everything and make sure that everything is correct, then the closing balance for that particular year will also be correct. By that, we are checking the accuracy and test of balances of that particular transaction of that particular entity rather than checking the transaction as a whole. By that, we are using statement of financial position approach. And this brings us to the end of audit approach for us for chapter 6. So now I'm not going to open the door for questions. Then we just have about how many days? About, let me say, 2 months to the exam. So we need to be fast as much as possible. Hopefully, we have class tomorrow also. So I will see if we can proceed to chapter 7 tomorrow because I will go to office tomorrow and I might likely come back late. But let's see how it's going to be. I'm going to definitely send a blessing to the group. So we have the floor now. Let us ask our questions and see how we can go about it. So, Mr. Isaac, please, you have the floor. Your question.
Good afternoon, sir.
Good evening.
Good evening, sir. Thank you very much. We really appreciate you. My question is, I have just only 2 questions.
Please go on, sir.
The first one is, I want to confirm under the disadvantages of business risk.
Okay.
the advantages of a disadvantages of a business is supposed to be the that is using a business suite approach is an inefficiency for small business.
Yes.
I don't know what is
Okay.
that is what you say. Yeah.
What we are saying, like the cost
Okay.
and the time you are going to put. You know, when you
Okay.
want to audit a very big company like this, definitely you
Yeah.
charge more and you will need
Yeah.
a lot of experienced staff and everything to be
Yes.
on the job. So just
Yes. Yes.
imagine that you are now putting a lot of resources in a very small this
Of
thing. The
entity.
disadvantage because you spend more and you put in a lot of experienced staff that they can also work on another big client. That is why they are saying that there. I hope you understand now, sir.
Yes, I understand. Okay.
Okay.
The second question, thank you very much. The second question is that the difference between substantive business
Substantive test.
test approach and financial statement approach that one is testing the whole transaction of the business, while the
Yes.
second one is testing the
No,
balances of the transaction.
no. One is testing both balances and the transactions, which is substantive test. Substantive test is checking both the balances, the transaction, disclosure, and the analytical process that you use to prepare that financial statement. That is what you are checking thoroughly, because they said you can use this approach because the internal control is weak or is not operating at all. So under that, it means that you are doing your audit work from scratch. No document to rely on. You know, if they have good internal control system, all those documents that you need, they will have worked on it, they will have collected where necessary before auditor comes. So under that, the auditor will not do much. That is system-based approach. But when you are doing substantive testing approach, you are testing the details of transaction, the balances details, the disclosure, and the analytical procedures. I hope you understand, because you are doing
Yes,
thorough
sir.
investigation. Do you
Okay.
understand
Yeah.
that? So
Yes,
under
sir.
statement of financial position approach, you're only checking the test of balances. You are confirming the accuracy of the balances. That is why they said by ensuring that the closing balance will be the opening balance. You can mute your mic, sir, so that you're not disturbed. So far, you can hear me. You can mute your mic, sir. So by the system of financial position approach, that approach is testing of balances. You are testing the balances to ensure that the closing balance for previous year is the opening balance for this year, and also check the transaction for the year, which is profit for the year. If these three correct, definitely your closing balance for that particular year will also be correct. So statement of financial position approach, it is the testing of what? Of balances. Why substantive testing is testing of transaction, testing of balances or this detail, testing of procedures, and testing of arithmetic accuracy or analytical procedures. Can you see the difference between the two? The substantive cover everything, while the financial position approach only tests the balances accuracy of the financial statement. I hope you understand now, sir, Mr. Isaac. You can go on. You are still raising up your hand. I hope you understand. You can unmute your mic and talk.
Hello, sir. Thank you very much.
I hope you understand now.
Yes, sir. Yes, sir. Thank you very
Okay,
much.
so you can mute your mic. Any other question, please? Any other question, everybody? Okay. So I want to believe that this chapter is well explained. Okay. Mr. Sulaiman, you have the floor.
Yes, sir.
Mr.
Thanks so much,
Sulaiman.
sir. We really appreciate you and understand the whole lectures. But I only want you to shed more light on where you explain that principle of CEAV.
Okay. Okay.
I just
So that
let
is
us
what
get
we call financial statement acceptance. These are the way in which we test the these are the way we test the details of transaction. That's what we call financial statement transaction. We'll tell the details of transaction. All the transaction. Okay, now, for example, they said let me say one of the expenses is you pay for purchase of office equipment. Abi? Purchase of
Yes, sir.
office equipment, as the case may be. So now, how do you do the financial statement transaction there? Then you can use this KIF, which is CEAV, to check. Then by doing that, you are checking the test of details on that transaction. First of all, the completeness. Does the transaction actually happen and complete that same year? Like, for example, in some organization, you see that the account department will raise a voucher for the CEO or the manager to sign. So in that situation, the account department has raised the voucher. On getting to the manager's office, the manager is not around, and the accountant called the manager that, sir, please do we have a transaction that you need to sign for, so that you need to authorize the payment so that we can make the payment. And the manager will not say, oh, I'm not around now. Go on with the transaction. When I'm in the office, you bring the voucher for me to sign. So so as an auditor, when you are on the field and they give you that particular voucher or invoices, and you see that the manager did not later sign, definitely you are checking the test of details. That is what we call completeness.
Okay, sir.
The transaction actually happened, but they were not able to complete it. The authorization there is not complete. That is on this thing. Existence, you find out that this transaction doesn't even exist, or they just raise an invoice for it and post it. Maybe in the aspect of fraud, you need to find out what did you buy that made them to give you this invoice, or what did you pay for that make you to raise this invoice. That is what existence. You are checking for the existence of that particular transaction. Accuracy. Did you post where you're supposed to post it? Did you pay? It is an expenses, or did you put it under liability? Did you accrue for it, or you pay it for once? You need to check. That is the accuracy, and you need to check whether all those figures, maybe there are 10 this thing that you bought, and the total is 500,000 naira. You need to add this thing together to give you the total 500, and to ensure that that is the same 500 they posted in their ledger. Then all these things, you are testing the test of transactions by using financial statement transaction. So that thing can only come under substantive testing approach. Mr. Razak, I hope you understand.
Yes, sir. Yes, I'm with you, sir. Thank you, sir.
Okay. So any
Then the
other
last
question?
one,
Then the last
remain
one is
one.
valuation. Valuation. It means that you are on checking the extent of that transaction. If the transaction, we have financial asset and financial liability. If
Yes,
there are
sir.
some transaction that if it goes beyond this amount, you amortize for it. You will not expense it. And if some transaction that you can expense and you are not amortizing for it, so you need to check all these things. That is called under valuation. You need to check the existence and how the significance of that transaction and where it is posted to. So all these things, you are checking the financial statement transaction by checking the test of transactions and check of details together. That is that about the financial statement transaction, and can only be used under when you are using substantive test approach. I hope you are following, sir.
Thank you very much, sir.
Okay. So, Mr. Habib,
Good evening, sir.
good evening.
Thank you very much, sir. We really appreciate it. Honestly, your lecture is superb. Thank you very much, sir.
Thank you.
What I want to ask is the control environment. I don't know if you can shed more light on the control environment and the test of control, sir.
Control environment and test of control.
Yes, sir.
Okay. Or you may control activity. Is it under that
Okay.
five internal control element that I mentioned?
Oh, okay. Sorry. Control environment and control activity.
Okay. So control environment. Do you remember when we are talking about this chapter 5 under ISQC1, which is quality control for management for the firm? You remember I mentioned leadership responsibility, Abi?
Yes, sir.
That is, I said under that the quality control that is the leadership of that particular firm is responsible for giving for putting in place good quality control in that firm in order to help them reduce the risk of expressing correct opinion. So the same thing under control environment, it means that the people in charge of that particular organization, I mean from the people in charge of governance, the manager, the CEO, as the case may be, or the people that are involved in policies of the people that make policy in a particular organization. So they are the one that is supposed to establish all those control for the staff or every member of the organization to follow. So control activities or control environment means that the manager or the people in charge of governance of that particular organization will set out some rules and regulations, the standard to be followed by that particular organization, which is one of the components of internal control. By that is what we call control environment. Then control activities now means that for every individual, after that control environment, then control activities now means that each of these departments or each of these segments have to be handled by individual. There must be division of work to ensure that if there's division of work, then the review and monitoring activities will not come in. If there is control activities, that means that at each point in time, there will be people that will be in charge of each department to ensure division of work. Then after that, it will help you the organization to now have this review and monitoring control. Because if one person is responsible for, if someone is heading this department, then you want to review that department. So that's the difference between.
Thank you very much, sir. Thank you very much, sir.
Okay.
Thank you very much,
I
sir.
hope you understand.
Yes, sir.
Very
Yes,
well.
sir. I guess probably my network is breaking. I understand very well, sir. Thank you very much, sir.
Oh, no. Huh. Okay, so in the aspect of no further question, so we are going to meet tomorrow by God's grace, inshallah. Probably, but I don't know. Mr. Abi, you can mute your mic. I'm not certain, but I'm going to see if I come back on time tomorrow, then I will definitely set up the class. So for those of us that are just joining for the first time, or for those of us that have been in the class before, please, this material is there to help you read through. It's not me that will read through it. It's because you cannot. They will still bring new material now, which is virtually the same thing with the old one. So it is there for you to help you uh, summarize what you are going to read through and to help you read through. Because if you want to read all this thing in the study pack, you know there's going to be a lot for you. So this material is there for you to help you read through it. So if you are interested, please reach out to me in my DM for the material. And I need to also say this, that we don't have time again. Please let us read ahead. If you have the material, you read in advance and you ask questions in the class. Definitely, I'm here for you. I'm going to, although I don't know it all, but with experience, you can rub mine together. Read in advance so that when you come to class or whenever I'm now explaining the chapter that you have read before you, it become more clearer to you. So don't let us wait that it stopped in chapter 7, chapter 6. I have to wait for you to that you explain chapter 7 before I will read. Read chapter 7, read 8, read 9, read to the last chapter. So when I'm explaining, you understand it better. So if you're interested in material, reach out to me in my DM. Then also, all this thing we are explaining to ourselves is one part of advanced audit and assurance. it is telling us on what to write. So how to write it? How to write it will now be when we want to start the revision class in this class. So please let us prepare ourselves and read very well. So on this note, this is where we call it a day today, and we'll meet again by tomorrow or next week, as the case may be, inshallah. So good evening, everybody, and have a wonderful evening. Thank you.
Good
Good evening,
evening,
sir.
sir.
God bless
Thank
you,
you.
sir.
Yeah, good night.
Nice, sir.
Thank you,
Thank
sir.
you,
Good
sir.
night, sir.
Good night.
Thank
Good
you,
night.
sir.
Good night. So I'm going to send the video link to the group chat and see if I can